Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast presented by Tusk Media. Real quick, check us out on YouTube, Twitter, Facebook. All of those sites, go to the .com and then do /Tusk Media LLC. We're on all those. iTunes, shout out to everybody there. Hit subscribe if you haven't already and leave us a review. Helps us out a lot on the ratings so we can get our content out to more people. Hopefully you enjoy it. If you don't, tell us that in the review anyway. Another announcement, I guess, a little housekeeping here. We've got a macro webinar coming up later this week. We're just going to throw that thing up on YouTube, so youtube.com/Tusk Media LLC. Taking a look at what's going on with the U.S. economy, looking at some global markets as well, and bringing it all home by talking about our portfolio a little bit and kind of trying to underlay some themes that we've been taking a look at. So check that out. We'll have it on audio as well on the podcast, but it might not be quite as compelling without the visual aid. So check that out. I'm Andrew Hall. Joining me today, Ben Nye, and we are going to jump right in. We're going to talk about Citigroup. We have already talked this week about Wells Fargo and JP Morgan, so looking back at kind of earnings that were announced last week. Jumping in on Citi, what really stood out kind of on the high level?
Yeah, so strong beat. They actually had a higher tax rate. Wells Fargo had a lower tax rate. Strong international business. And what really surprised me was the strong investment banking and trading revenue, especially on the trading side, because everyone was talking about how this was a really weak quarter for fixed income. JP Morgan was talking about it, and this was kind of the pressure on bank stocks leading into the at least the CCAR results. CCAR gave them a lift, but I was really pleased with what I saw from Citigroup, and I'm a fan of Corbat's strategy. I mean, he's been really slow, but he's been methodical, and he hasn't taken a misstep. I mean, very much a tortoise strategy, if we borrow from the tortoise and the hare. It's just slow, methodical. Quarter to quarter, you don't really see much progress.
Right.
But if you look back a year or two, they've come a long way. Just because they haven't made a misstep since then, they just continue to move in the right direction.
Yeah, and I can remember one of the first times we did a podcast, you and I, on Citi, we talked about kind of the challenge, and it was going to come down to execution, because when you look at what they're wanting to do, it's almost a we want to be all things to all people type approach. I mean, they're incredibly diversified in their operations, both in what they're doing as well as where they're doing it.
Yep.
So with that in mind, we've talked already a little bit about kind of the strength of the international business for all of these banks. Wells Fargo obviously doesn't really have that exposure, but JP Morgan, we touched on it. Citi really benefited from that in a way that we would expect them to. But I think one of the more interesting things when we start to talk about really just like the execution and things like that was really how well they did kind of on the investment banking and some of those components. Things that you don't really think of as Citi necessarily having that forte and that true strength, but they did surprisingly well.
It seems like they have the right people in there now, and they have the right discipline. We've talked about Wells Fargo, who has to kind of reinstill that discipline. Citi appears to have it, and they're executing well. I mean, we talk about the trading, but even international, where they should be relatively strong, Mexico, they posted 8% growth, and they feel pretty in a economy that's growing 2%.
Right.
So when you're 4 times the market, you're gaining market share, and so Citi's just demonstrating that, hey, just because we're diversified doesn't mean we can't be the best operator in each country that we operate in. And that's what they want to do, and credit to them because they're demonstrating that. It wasn't a blowout quarter.
Right.
They did have some pressure on the net interest margin side, but they were able to do the things that they wanted to get done fairly well. They're keeping their efficiency ratio in check, and they're reiterating their return on tangible common equity guidance.
Yeah, you mentioned not really a blowout quarter. I'd almost be stunned if we had a blowout quarter for Citi. At this point, I think you're exactly right on the illustration you used earlier in terms of they're the tortoise. They're trying not to have any missteps. They're trying to kind of continue to push the ball up the field, whatever analogy you want to use. We're not looking for the home run here. We're looking for them to continue to do that. Whatever space they're going into or that they're currently in, they're looking to be the best operator, and that's paying off really well.
Yeah. When you can consistently get on base and you're not striking out, there is little room for error, because if you do get an out, like, that's a big deal. That's tough to come back from. But they're just they're trying to play a high percentage game, and so far it's working for them.
And that kind of becomes the question from an investment thesis standpoint. You've had a good run. You've had continued excellence in operations. I think that's fair to say. But at the same time, you kind of, each passing quarter, you kind of wonder what could happen, what could get in the way, what could be this trap that Citi's not thinking of. What do you identify as kind of the threats or things that could maybe miscalculate, that might be lurking, and might also present themselves as real opportunities to continue to shine?
The biggest problem I see for them is they have weakness in the international side, a relative lack of competitiveness on the domestic side, get spread a little bit too thin, or just interest rates don't increase like they want them to.
Yeah.
So when you have that cocktail, what could happen is you start to push out those return on tangible common equity guidance. So just as a refresher, they want to hit 10% X deferred tax assets in 2018, and they want to hit 10% all in 2019. Some analysts are looking at it and saying, well, that's a little bit ambitious. They've already pushed this guidance out already. I gave them a bit of a pass when they did that the first time, because I thought, they are making progress. It's not great that they are not hitting those numbers, but I don't think those numbers were formulaic originally. I think they were 10% is a nice round number.
That's a great number.
Yeah. But now that we're getting closer to that, if they start pushing out that guidance when they reiterated it strongly this quarter, that would be a very big negative to them. And that's really where you're going to see the big catalyst for Citigroup shares in either direction, I think.
Yeah, because I would add, again, it's such a round number. To reiterate so strongly almost implies, it's definitely happening. Right. And that's my read-through. Obviously, we don't know that. We don't know anything you don't know. But.
Yeah, so, they hit those numbers, and I think that all of a sudden you'll see Citigroup is no longer deserves the discount to the other banks that they have. And bear in mind that that tangible book value per share for them is $67.32. Book value is $77.36. So a relative multiple would put them like close to $80, and and it trades at what, 66, 67. So more upside for Citi if they can get it right, but there is a little bit of wild card there.
We do hold Citi, we own Wells, we own JP Morgan, all these banks that we're discussing. Probably going to continue to hold Citi. You remain optimistic, I'm assuming, and kind of have faith in management to continue to get it done.
Yep.
That's kind of what it comes down to in a lot of ways.
Yeah, I agree.
Is that execution, and that's no different than Wells Fargo. If you hold Wells Fargo, you're counting on management to fix it. Here we're kind of hoping on Citigroup to kind of continue marching along.
Yep.
Any other closing comments? Anything else you want to hit?
I think we hit it all.
Great. So hit subscribe real quick. Do us that favor. Check out the macro webinar on youtube.com/TuskMediaLLC. We're also on Facebook.com/TuskMediaLLC and Twitter.com/TuskMediaLLC. We will be back later this week. We'll talk about something other than bank stocks. Should be a good time. Y'all have a great day.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.